Welcome to CoinVest Mistakes and Risk Management video series.
And in this series, we are going to talk about trade preparations and how to avoid potential losses. And because we are looking at mistakes and risk management, these are the 6 videos that we are going to prepare for you. And the first one will be trade preparations, and the rest will be entry, exit, selections, timing, and psychology.
A little bit about myself. My name is Wai Min, and I've been doing investing for the last 20-25 years on stocks and options. And I have been into my semi-retirement years and doing full-time trading. And with Jeremy, we have been doing CoinVest Institute.
Yeah, and this is Jeremy here, and I've been investing for more than 10 years and been in the hedge fund administration for more than 5 years. And this is where I can share my experience in investing.
As a disclaimer, all the views and opinions here from Jeremy and myself, we are from the speaker's personal capacity, not in any way recommendation. They are only for education and entertainment purposes. Please do your due diligence, and of course, past performances does not guarantee the future outcome. All the material here are copyrighted. Please do not circulate, copy, or duplicate any of this material.
Yeah, and this is the first part we would like to share, which is who is most prone to investment mistakes. And you can see at the diagram below, 49% of the people are new entrants. And this is natural, right? Because when you first started investing, when you first started trading, there is a lot of things that you may not be sure of, and that is where you are prone to make more mistakes. But however, you can take a look at the bottom, which is the people who are more than 10 years of investment experience, 5 to 10 years, they are also making mistakes, right? And that is taking up to 9 to 10% of the whole diagram itself, the whole chart. So this is a source from CII Institute. And as we can see, people of all ages or all experience do make mistakes when investing.
So Jeremy, we are all not free from mistakes. Mistakes happens every day.
Correct.
But it's important to minimize it, right?
Yeah. And that is where under trade preparations, we have to avoid these following mistakes, right? So there are 6 of them, and we'll go through them in depth in the next few slides. So the first one is not following rules, right? And this will lengthen your learning curve. The next will be over leveraging, which potentially risks all your capital. Trading on large position sizing, right? Or trading in nano-small market capitalization stocks, or not knowing your stocks, and also the last one, not doing your homework.
Let us dive straight into the first one. Mistake number 1, not following trading rules. As you know, in trading, there are many rules there, right? And rules are translated into standard operating procedures. Now, if we follow the SOP, it means that we are shortening the learning curve, because a lot of experiences, knowledge are built into the SOP. So if we follow the SOP, we shorten the learning curve and we can move forward faster. What if we don't follow the trading rules or SOP? So this is a graph that shows, knowledge and skills as they increase your confidence level, right? We know that. Increase in experience, it also increase in confidence level. Look at the next one. With time we gain experience, with time we gain success. But you can see that different people, we have got different learning curve, different bumpy rides, as you can see, and usually from nothing to something. But we have to go through a journey. Overall, you can see that time and performance, there will be a increase over time. Potentially, there could be even decline or losses at the initial stage. So what is the goal? The goal is to minimize this or even to avoid any potential decline so that we can shorten this period and go for improvement, goal, growth, and success. The shorter, the better. So that is why please follow trading rules and SOP to shorten your learning curve.
Right. So the next mistakes that many investors and traders do is over leveraging. And what is leveraging? Leveraging is borrowing money on your margin account. And if you are right, congratulations, you make a lot of money. But what if you are not right? You will lose all your capital and even go into debt. So it's very important as an investor to invest what you can afford to lose. Therefore, don't leverage unless you are a professional, because professionals, they know how to manage and repair positions. Therefore, we should always diversify our portfolio and keep our capital buffer of 15 to 20%. Last of all, stop over leveraging your trade account and know your risk per trade.
All right, let us look at the next mistake. Mistake number 3, large position sizing. That is a mistake. Remember, Jeremy was saying, limit your risk per trade. So general and ideally, we should keep our risk per trade lower than 5%. That's the best because you want to have small position sizing. But of course, when you have a smaller account, you tend to be a little bit higher. But please make sure that it is definitely, absolutely not more than 10%. Imagine if you got 100% of your total capital, right? 10% means you can only do 10 trades. That's very low. So if you have 5% per trade, you can have 20 trades maximum. But again, as Jeremy says, keep buffer of 15 to 20%. So with a smaller position size, you can have more trades and that will reduce your average risk. So risk per trade is capital. So what is the importance of position sizing? Let's take a look at this graph here. There are 3 variables: win rate in green, position size in blue, and the risk in red. So let's say we have got a win rate of high and low over here, right? But most of the time, we may not know our win rate. In stocks even, 50% win, 50% lose, right? You can't even tell. But in options, you actually can have certain control of win rate with a higher probability trade, whether it is a 60%, 70%, or 90% win rate. Possibly, it is possible. Now, if you are unsure of the win rate for certain trades, please keep your position size very low because it will have small variances from a pretty smooth to some slight bump over here. So these are considered as low risk when you are unsure, uncertain of the win rate. But when you have certain higher confidence on the win rate, you can probably consider a slightly higher position size with a pretty much higher variable here compared to the previous, and this has a higher risk. So need to know your risk before you invest, but please absolutely avoid this. Avoid high position size with a low win rate because this is bound for losses. Low win rate with a high position size. So the conclusion here is that please keep your position size small, especially when you're unsure of the win rate. Consider some slightly higher if you have the confidence. Okay, so position size again is the only variable you can control. Keep it small so the variance and risk are lowest to suit your personal risk tolerance. That's mistake number 3. Keep it small.
The next one will be looking at trading at nano-small capitalization stocks. Okay, this is a very important understanding of the whole market itself, is that we do not want to invest in small companies because they are less robust and less resilient to handle challenges. So you can see now at this current situation where we have COVID-19 pandemic, we have US elections, and also many other factors that is affecting the market. Therefore, can these small companies able to survive? That is why we are looking at larger companies from mid-caps onwards will be the best overall, right? So there are many good large cap companies with low prices. Look for them, filter for them, search for them, and choose from them. All right. And this is where for long-term investment, it is safer to select from larger and stable companies. And of course, mid-cap onwards will be good. And this is where Core Invest Institute, we focus on companies that are US 20 billions and above.
Right. What is the next mistake? So knowing that you want to invest on relatively bigger companies, right? You also need to know your stocks and your companies. So it's important to know what you are investing on. So sometimes, we tend to listen to news and some friends, for some tips. And tips usually have some uncertainties there. There are quite a lot of hype, and you need to know whether they are news or are they noise. So differentiate that. And when you are not sure and just listening to tips and investing in things that you do not know, that is equivalent to gambling. Gambling is full of uncertainties. So please do not enter without knowing the underlying yourself, whether it's a stock, an index, ETF, etc. As Warren Buffett says, risk comes from not knowing what you are doing. Let us look at this. So this is a chart to compare the S&P 500 performance in red bars over here. This is 2019 versus 2020 this year from May to September. The gold bar here represents the CII Core Invest Institute Index, and there are 30 strong, very, very strong companies that Core Invest Institute we have in-depth study and also filtered them from the 500 companies in S&P. The next one is the yellow color orange here, which is called the GEMS. This is GEMS, and it comes from our app called the Legends of Investing. You can also join for free actually, and for GEMS ranking, you can see the performance. So look at the gold and the yellow performances in 2019, far outweigh the S&P 500, as you can see. Now look at the pandemic period, which started in March, April, and by May, which is probably one of the lowest periods already, you can see that the GEMS as well as the CII index were more resilient, and they were able to withhold the losses better than S&P 500. What about now? The recovery has been exceptional, and up to as of September, consistently, both the CII index and the GEMS, they have been performing better in terms of recovery compared to S&P. What does this mean? It means that, you see, in Core Invest, we have studied very deeply into the 80 companies here. And if we were to invest in these well-selected 80 companies, we are much pretty safer, and also performance is much better. So whatever you are choosing, please know your stocks, you know your companies. Do not invest just on tips and news and trade on uncertainties.
Okay, so what is the last mistake? Okay, so the last mistake is actually not doing your homework. Why is it doing homework so important? Because you want to get yourself prepared. You want to understand the market condition. You want to understand what is happening around the market that will potentially affect your trades, right? So if you are not doing your homework, it means that you are unprepared. And that is, you are not giving your best shot to have the higher or high win chance, right? So this is also related to complacency and overconfidence. There are many traders and investors out there who invested for many years, and they think that they are not going to make a mistake. But again, as I mentioned earlier, with the current situation, US election is coming, COVID-19 is so volatile now, and if you are not prepared for the worst, how are you going to profit from your trades, right? So therefore, it's always good to prepare your homework during the weekend, right? When you have time, just do some preparation and strategize for the week. And this will result in a good trade. And this is from Alexander Elder, a very famous trader. And he says that the goal of a successful trader, make the best trade. Money is always secondary.
Well, in summary, for trade preparations video in this series, and for this video, we talk about how to avoid making the following mistakes. In summary, do not follow rules, lengthen, which will lengthen the learning curve. So follow the rules, follow the trading rules, follow the SOP. Please do not over leverage because of the risk, and it's important for you to keep to your capital. Large position sizing, remember, keep it small, diversify so that you spread your risk, okay? And go for low position. Invest in bigger companies, all right? Avoid small nano, go for bigger companies. Know your stocks, okay? Always study them, invest on what you know, and always prepare your trade plan, do your homework before you enter. And you can always do it on the weekend, and you know what you're going to do in the coming week so that you are well prepared. Okay, as the famous saying says, if you fail to plan, you plan to fail. So please plan and do your homework.
So for trade preparations, Wai Min have shared that we should plan and we should do our homework, during the weekend. And this is something that we would like to do and we have something that is available for you immediately, which is what you can do is scan the QR code, go to our corehub.me/world news. That's the place where you can read up a lot of news around the world and understand. Even we have ebooks, we have free guides over there, useful links for you to go and plan and also study, right? Do your trade preparations. Right? And if you want to know more about how options can benefit you in your trade preparations, you can always visit our Facebook group, Modern Power Investors Options. Just do a QR code scan over there, and we will approve and allow you to join. And that is where we will share a lot of different kind of videos and also information for you to learn more about how you can invest safely in the stock and option market.
Therefore, please avoid these mistakes. Do smart, simple, and safe trades. That's the way to invest. See you again in the next video and join us.